traders at Access Bank say that there is renewed buying interest in the bond market, although at a more measured pace with elevated bids recorded across the bond curve. On the T-bill side, the 17th March 2026 is most active, trading as high as 20.5%. However, market liquidity remains in a debit position. Kolawole Komolafe, the Treasury Team Lead at Access Bank, joins me now for more on the market movements. Thank you so much for your time today, Kolawole, and I'd like to get your take on the market this week and what are your expectations for inflation?
Thank you for having me. So I'll start with the money market. So the market is currently in a repo of about 250 billion. Subsequently, we've seen rates increase as you pair and overnight rates. Currently at over 32%, which we've also seen that illiquidity also play out in the fixed income market, where we've seen elevated bids. For the NTB market, we'll continue to see elevated bids we've seen interest on the March 2026 OMO paper that's on Monday's trading session, where we saw trades happen at around 20.5%, which is up from 20.20% that we saw on Friday. We've also seen interest on the newly issued one-year NTB, that's the 9th July paper. We'll see it trade at around 15.45%, but we've seen just a very bearish market, same as the FGM bond space. It also opened the week in a very bearish undertone, but we'll continue to see interest on the 2031 and 2033 papers, which traded at 16.90 and 16.7% respectively. Overall, we saw average bids across the benchmark bonds increased by 10 basis points, and we expect that sentiments will be carried into today. We've seen those sentiments also play out today as the trading session has progressed.
All right, but how effective would you say the central bank's intervention has been in stabilizing FX market volatility this week?
Okay, so we experienced some volatility on Friday last week, which was because of some FPIs that were engaged in profit-taking activities. Subsequently, we've seen the CBN intervention. They intervened on Friday, also on Monday. That's 2 trading sessions of intervention, and their intervention basically has calmed the market. And we saw that post their supply, market was rather calm, and market traded freely. On Monday, we saw benchmark rates appreciate, with the infant view up significantly appreciating by 11 naira to close at 1,518. We also saw that appreciation in the NAFEX and also the CBN rates. Today we've seen a rather calm market, and we expect that increased supply would stimulate the market. But we've seen the CBN really intervene and sort of calm the market in recent trading sessions.
Yeah, but what would you say is behind the renewed FPI demand, despite the rate uncertainty we're seeing in the market here?
Profit taking, really. You know that the rates, levels at which they enter the market, we've seen relative appreciation from that level. So we just think it's just FPIs taking profit, but it's not significant with regards to the outstanding demand, but that dynamic still continues to play out. We haven't really seen them on the demand side today. The market dynamics have been relatively in line with the trend. So we expect that market will be stimulated as we progress into the trading session and see how the supply and demand dynamics would continue to play out.
All right, thank you so much for your time on the show today. Kolawole Komolafe, the Treasury Team member at Access Bank.